Okay, in this video, I am going to go through computing materials to be purchased, direct labor, and variable overhead, or probably all manufacturing overhead. Okay, let's start with material, okay? So just like production, when we were saying, hey, listen, there's a certain amount that we need to have available for sale, and then we want some products, finished products, on our shelves at the end of the period so that we start the next period with some stuff on the shelf. Material is the same way. Okay, we're going to figure out how much material that we're going to need, and then we're going to want to create, or actually, I should say, purchase more material so that we have some on the shelves at the beginning of next period. But then in this period, we're starting with some material already on the shelves. So the formula to determine exactly how much material we need to purchase in this particular period starts with this formula. Okay, so the total amount that we need to purchase is going to start with, excuse me, units to produce. Okay, so we need to produce some, we're going to, whatever it is we're making, if we're making tables, if we're going to make 500 tables, then we're going to start with the number of tables. And maybe I will just, that was a terrible looking table, but I could say, hey, listen, I'm going to produce 500 tables. And maybe it's the case that I need, 2 sheets of wood for every table that I make. And therefore, I am going to say, I need to purchase, at least to begin the thinking about how many sheets of wood I need to purchase. It's looking like I need to go out and purchase 1,000 sheets. Okay. Then we're thinking, in addition to purchasing the 1,000 that we're going to need for this period, I want to purchase some extra, and it's always going to be some percentage of however much I intend to make next period, right? So again, if next period I'm thinking I'm going to uh, produce 1,000 units, and I want to set aside or have available to me 20% of that, then I'm going to need to purchase 200 sheets so that I have them on ending inventory next period. And then, just like we were saying, I'm going to start this period with some sheets of wood already in my beginning material inventory. And so 1,000 sheets plus the 200 that I need at the end of the period minus 300 that I already have is going to leave me with 900 sheets. And you would think this is the end of it, but if we think about it, I don't want to just know that is my phone. And it is nobody who I know. Somebody in Alabama? No way. Don't know anybody in Alabama. Anyway, um, it's not good enough to just know how much material we need to purchase. What I want to know is, not only do I need to know how much material I need to purchase, but how much is it going to cost? Okay, so this really is sort of step one in the process, computing materials to be purchased. Okay, so in this particular example, based on a previous discussion, we were saying in October, we are going to produce 710 units. And in this particular example, we're going to need a half a pound of material, and therefore we're going to need 355 pounds for production. Okay. Then, in addition, we want some portion of what we anticipate using next period. And so in the next period, we're essentially saying we need 907 and 50, and therefore we need some percentage of that at the beginning of next period, and that is what we are going to add to purchases in October. Not entirely sure. Maybe it says it in the notes. So let's see. Add desired ending merchandise inventory for TSC policy. So they are saying, okay. So desired ending inventory for TSE, its policy starting in October is to have ending materials equal 50% of next period's materials needed. This is 335,000. So I think we're getting it a little wrong. So let's go back. So materials needed for next period is 670. So we are actually going to produce 1,340 units, and we have half a pound of material. So the production needs for next period are 670 pounds. And this question is saying, hey, listen, if it's 670 pounds and we want to have 50% of that in beginning inventory on November 1st, that would be 335 pounds that we need to purchase in October. Okay. So 355 plus another 335 gives us 690. And then I'm starting October with, in fact, I could probably even blow this up a little bit. I'm starting October with 178 pounds. And therefore, if I need 690 and I've already got 178, that's a subtraction, then I need 512. Okay? 512 pounds. And then, like I was saying in the previous slide, that really is only step one. That's just the quantity of material I need to purchase. What I'm really wanting to understand is how much the total cost is going to be. So if I'm needing 512 pounds and every pound of material is costing me $20, then I need to come up with $10,240 so that I can purchase all the material, direct material, that I'm going to need in October. Okay, that is direct material. Okay, labor, cost of labor, much easier because there's no beginning inventory of labor and there's no ending inventory of labor. Okay, so the cost of labor really is the units to produce times the number of labor hours that are required per unit, and then times the cost per hour for direct labor. Not terribly difficult. Okay, so in this particular example, again, we're going to produce 710 units. Apparently, according to our assumptions, every unit that we're going to produce is going to require a quarter of an hour. So that's 0.25% of an hour. So that's 15 minutes. Okay. So I'm going to need a total of 177 and a half hours. And then, oh my God, some poor individual is only getting paid $12 an hour. That's terrible. Obviously, it's a kid, right? You would never pay an adult that little. The only person who would work for that little is a kid. Anyway, never mind. Okay, so 177 and a half hours times 12 hours, $12 per hour. Total labor cost, 2,130. And like we were saying, there's no beginning labor and there's no ending labor. It's just you have to start making stuff on actually October 1st. And once October 31st rolls around, that's the end of the direct labor. Okay. Now, overhead. Okay. Factory overhead. How much do we budget? Okay. So in this particular example, let's just read this. The factory overhead budget shows that the budgeted costs for factory overhead that are needed to complete the estimated production for the period. Okay, it doesn't tell us anything. But what it's saying is, hey, guess what? the way that we are going to allocate our variable overhead anyway, is based on direct labor hours. Remember back in, I don't know, a previous chapter, we were saying there's all sorts of allocation bases. You could use labor, you can use machine hours, etc., etc. In this particular example, it's looking like they're using labor. Okay. So based on the previous slide, we just determined that for the month of October, we need 177.5 hours. And important to note that we're not using the total dollars, we're using the actual direct labor hours. Okay, so 177.5 hours, just to make that clear, times this isn't the hourly rate for our employees. Remember, this is the predetermined manufacturing overhead allocation rate, and it's for variable overhead. And so for every labor hour that we incur, we are going to allocate $10 of overhead. Okay. So 177.5 times $10 per hour is $1,775. And then we are going to add 1,500. Okay. So 1,500 fixed overhead. And so our total overhead for the period is 3,275. Now let's look at this. The variable portion of factory overhead is assigned at the rate of $2.50 per unit of production. The fixed overhead is 1,500. Yeah, that's fucking really confusing. Okay? So they just continuously fuck you up in this class. So we're saying, listen, in fact, I scribbled that too much. We're saying that every unit that we produce is going to get allocated $2.50 of overhead. Okay. I should say variable overhead. And that's different than this $10. And that's because we were saying, listen, if my variable overhead per hour is $10. And from the previous slide, I think we were saying every unit that we produce is only going to require 15 minutes or a quarter of an hour. Then we would take $10 per hour times the 25% gives you $2.50. So I would really make sure that we understand when we're doing the homework and when we're thinking about this stuff, what is the allocation rate that they are talking about? Are we talking about the variable overhead allocation rate based on what we learned in chapter 3? Or are they talking about the variable overhead per unit? Two different things. Per unit and per direct labor hour, totally different. Okay? Whatever. They're just trying to mess us up. Okay, so now I think once we understand some of the bigger picture items, we know that the cost of a product consists of three things, and this goes way back to the original chapters: direct material, direct labor, and manufacturing overhead. Okay? And I can break manufacturing overhead out into two components. It could be the variable manufacturing overhead and then the fixed manufacturing overhead. So the first product cost is material. And we were saying we need a half a pound. Remember, we're doing a per unit cost. Okay, the product cost per unit. And so we were saying way up in the previous slides, for every 1 unit that we produce, we need a half a pound of material. We also said that every pound of material is going to cost us $20. And therefore, to make one full product, we're going to need $10 of direct material. And then we can do direct labor. And we just did that in the previous slide. And we were saying every unit is going to require a quarter of an hour. and we're going to pay our poor children $12 an hour, and therefore every unit is going to get $3 of labor associated with it. Then we would do variable overhead, and in fact, I can call that 3A. Okay. And again, we said we were going to allocate overhead based on direct labor hours. We are going to allocate, a quarter of an hour per product. The variable manufacturing overhead allocation rate is $10, and therefore each unit is going to get $2.50 of variable overhead allocated to it. And then finally, we can do the fixed overhead. From the previous slide, we said we are going to incur $1,500 of fixed overhead. And somewhere in those previous slides, okay, we expect to produce 1,000 units. And so if I take 1,500 divided by 1,000, I get $1.50 per unit, $17. There's something interesting about this, okay? If I go back to the production slide just for a second, if I can find it, units to produce. So we're going to produce 710 in October. Again, I don't want to go through the whole thing, but this is how we were determining the units that we were going to produce. November is 1,340. December is 950. There's all these different levels, okay? And in our question that we were just doing, they're saying it's 1,000 per month, okay? The important thing to remember is that when we set our budget, when we create our fixed overhead allocation rate, we do that at the very beginning of the period. And we have to do our best at estimating how many units we're going to produce. And so we're thinking that the production per month is going to be an average of about 1,000. Okay, that doesn't mean that it will specifically be 1,000 every month. So in this particular example, we're sort of just averaging it out. And we did it all the way on January 1st when we created the budget. And we created the predetermined manufacturing overhead allocation rate. We did our best, okay? Anyway, for us to produce